All right, good evening, everyone. As I said, my name is Rebecca, and this is the basics of bookkeeping. I have split this tonight into about two sections. We're going to do the first section is a little bit more conceptual on how to get yourself organized and the benefits of consistent bookkeeping. And the second section is going to be more about how you can get your books set up and a basic overview of your regular tasks if you decide to do your own bookkeeping. I will have plenty of time at the end. If anyone wants to ask questions then, I'm more than happy to stay on until 7 o'clock when it will time out if anyone wants to ask questions. Bookkeeping is a part of your everyday business. It's something you will have to do anytime you do a transaction. You are essentially doing bookkeeping by creating that transaction. So by keeping track of it, you can really evaluate how well your business is doing. You can view your cash flows, see which services are doing well, which ones aren't, and see if your prices need to be adjusted because you're doing so well with sales, or if you need to reduce them because they're not as popular. It can help you set realistic business goals and budgets that allow you to do so many other things with expansion and growth. And additionally, it makes your tax planning and filing so much less stressful because you will already have 80% of it done. So why is bookkeeping so overwhelming? I already know you have so many other responsibilities between your personal life and your business that it gets a little hard to keep up with all of the tasks. And it'd be overwhelming for some people who are just starting out to figure out where to go and how to do this on their own and keep up with it accurately. So good bookkeeping practices breaks down into two components: being consistent and being organized. With consistency, it's really just setting a routine for yourself. It really doesn't have to be time consuming. If you schedule yourself time every week to to upgrade your transactions and keep track of scanning your documents, you will make your life so much easier in the long run, and you don't have to stress about doing it all at once. So if you set reminders for yourself and do it on, say Thursday mornings, you have one meeting and you're done for the morning and you have a good block of time. Set yourself an hour on Thursday morning just to do the bookkeeping and keep consistently updating it so that you don't get behind and struggle later. When it comes to being organized, everyone always has their own system, and it's really key for you to find something that works really well for you. But without that system, it's extremely easy to lose important documents and then get in trouble later because you needed them desperately for an audit or something. So some easy organization tips and tricks just for bookkeeping that I've found works the best for anyone I've helped is maintaining physical and digital copies of the most important business documents like your business license, your contracts, bank statements, bank loan documents, any financial reports. If you keep both physical and digital copies, you're most likely going to be all set. And if you ever lose the physical copies, again, you have the digital backups. Because there are so many documents involved in bookkeeping, it can be hard to keep a physical storage of them all. So I highly recommend scanning them. If your phone or your computer, just keeping record of them on an iCloud service makes it easier for you to access them wherever you are without stress. And in addition, it helps you categorize and organize them better to find things easier. So organizing them by expense type or by the period the invoice was occurred in. It makes it easier so you don't have to worry about it later if you needed that document specifically. It's less to stress over and search through. And then additionally, for those of you in the service, if you have invoices and you haven't standardized them yet, it would be really a good idea to sit down and create your own standardized invoice to make it easier to search for the date when the customer or the service provided, just so you can organize them a little bit better in the long run for yourself. So to tack on to organization, we're really recommending you keep complete records. The IRS recommends you keep up to 6 years of records at any point, just because of audits or vendor disputes. You have those records and you have the proof necessary to fight whatever is going on. But it's not only important to keep your financial documents. Non-financial documents are just as important because they can be used to justify what you are doing at that time. So client meetings and travel plans, mileage, business meals, those can all be justified when it comes to being deductions by keeping a planner or a schedule, or by emails confirming the date of the client meeting. Any of those documents are key to proving your deductions later. So if there's any question about the deductions during audits, you have that documentation right away. Something to keep in mind that really helps you is separating your finances. If you haven't already, keeping your personal and business expenses separate with different bank accounts is something I really recommend. Then you don't have to worry about struggling to label a business or personal transaction. In addition, you can see clearly how much your business is making and which expenses are really draining your profits. You don't have a blended finance issue to go through, and that also makes it easier for you to file taxes for yourself and your business later. Something else that bookkeeping allows you to do is setting budgets for yourself. Budgeting for any business is important. You can keep a track of all of your expenses as well as your income coming in every month, but it lets you keep your finances in control, determines your spending priorities, and then you can really see which expenses are draining your system because of that budget. Budgets also allow you to track your slower months. If you are in a business that is seasonal, it can let you prepare for them in advance during your busy months. And it's generally recommended you have at least a 35% profit to maintain your operations for any small business, and at least 3 to 6 months of expenses saved up for the slow seasons or in case of emergency. And I know that seems like a daunting amount to try and set aside all at once, but by creating that budget for yourself, you're also creating an opportunity to set a little bit of that money aside within that monthly budget. So it's not something that happens all at once, but it's something you can do slowly over time. So as I said earlier, bookkeeping itself has numerous tax benefits. For the most part, you already have all of your documents organized. You have all of your information and proof for your deductions. You can plan and budget your quarterly taxes easier this way. So in the long run, it's a less taxing process just to file your quarterly taxes. You can estimate your payments easier and set that money aside as well. There are many ways you can start your own bookkeeping. If you want to do a physical book because that's what you feel more comfortable with, or you could do Excel, or you can opt to do a software. Depending on your needs and your comfort level, you can just create your own spreadsheet or ask someone to customize one. There are numerous accounting softwares that can help you with your bookkeeping. QuickBooks, Sage, and OracleNet are the ones I highly recommend. They are the biggest three, and they have very, very broad services that help you with payroll, bookkeeping, invoices, all of your financial statements. It will help you do all of it with minimal entering of information from you, because you can link it to your bank account as well. When should you decide to hire a bookkeeper? You're going to go through all of this and you're trying to do it all on your own, but when does it become the point where you should just say, it's better for me to pass this to a bookkeeper because I know that it's a better option for my business? If your bookkeeping takes up too much of your time, if you're having too many transactions to keep up with, if things aren't adding up between your profits and your sales, And most importantly, when it comes to bookkeeping, you're estimating your tax payments based off your bookkeeping. So if those aren't coming out right and you're struggling to get those accurate, you might also be missing write-offs and deductions that a bookkeeper could help you find. So in that situation, if you feel unsure if you're keeping up properly or if your taxes aren't going correctly, hiring a bookkeeper will help sort out your documentation and get everything back in line for you to file those quarterly taxes without fear of the estimate being way too low and not having enough money. So after getting organized and getting everything set up for your documentation, you really have to set up your actual bookkeeping method. And that breaks down into several steps. So first things first, you really have to decide on your bookkeeping and your accounting methods. So the bookkeeping method determines how and where you record your transactions, and there's two methods to choose from. There's the single entry method, which is much simpler, and it's really just best for businesses with only 1 or 2 transactions a month. And then there's the double entry method, which is more recommended. It's more accurate. You can catch mistakes easier, but it does record every transaction twice. So it is a little bit more complicated to deal with, but in the long run, it is much more accurate. So the first single entry method looks like this in the long run. This is just a basic example based off a week-long bookkeeping entry. So this is how I said, it's all the transactions are there, and it just provides more of an estimate of your accounts in the long run, because you don't know if there's more things that you're missing or if things are not accurately recorded on your bank account. And it's harder to catch those mistakes because you have all of these transactions just in a row to calculate them. So in the long run, it's just better for small businesses that don't really have a lot of inventory or equipment to keep track of, and that are just mostly paying their regular utility bills and such, so that it's easier for you to keep track of those, but it's not gonna be too inaccurate at the end of the balance. However, the double entry method, like I said, is more complicated, but it is the most adopted method, and any software you use will utilize the double entry method. So this records transactions twice, and it does that so it balances your accounts out. So for this example, rent expense and cash, we're reducing the cash to pay for the rent expense, and that expense is getting tallied up so that you have that listing later when you do your financial expenses. And that way you can keep track of all of the expenses paid that way. From there, you have to decide your accounting method, and that determines when you're going to record your expenses and your revenues. And again, there are 2 methods for this as well. So there's the cash basis, which records expenses and revenues as soon as it's received or paid, or the accrual basis, which records expenses and revenues in the period they're earned or incurred. So there is a slight difference with those. So I have 2 situations that I'm going to use for both methods just to give you a clear overview. So the first example is going to be receiving a payment for a service that was scheduled for the next month. With cash basis, we're going to record that as service revenue right away. No hesitation. That's money we earned, because even though we're going to perform that service next month. The same for the second example. You're paying a vendor for inventory that won't arrive for 3 months, but that's inventory that we're already going to count as ours because we paid for it. So it's going to be recorded automatically as an increase in inventory and a decrease in our cash. However, with the accrual basis, it gets a little bit more complicated, but it is more accurate in the long run. So same situation, we're going to count for the service revenue that's being scheduled next month. So on January 1st, we're going to record that we received cash. But instead of going ahead and allotting that to our service revenue, we're going to put it into an account called unearned service revenue. It's kind of holding place until that we provide that service, and then we can qualify that as an earned revenue. So in February, when we actually provided the service to the client, we're going to credit that back into our service revenue account. For the paid vendor for the inventory, again, we're going to create a holding place kind of for where our expense goes. We paid the cash out for prepaid inventory. That's our holding spot. And when it comes in, we're going to allot that prepaid inventory back into our inventory account so that it's accurately representing the amount of inventory we actually have on hand. I know that gets a little bit confusing and a little bit complicated, but the best way to explain it is you don't want to count the cash for the items you haven't done yet. If you haven't incurred that expense or performed that service, you don't want to account for that in your current books until it actually happens. So as you can see, there are several business accounts: the prepaid inventory, cash, service and service revenue. Those are business accounts, and they're the best way to track and organize your transactions. And they're generally organized by type of account. So asset accounts, liability, revenue, expense, and equity. So those are all organized on a chart of accounts. So it's easy for you to find all of your business accounts and label them accurately when you're making your entries. So an example of a chart of accounts is just very simply this. It's a listing of the accounts in order. This example has account numbers that start in the thousands. So the assets are all going to be in the thousands category. Liabilities are all in the 2000s category. And if you set up a chart of accounts for yourself like this, it's a lot easier for you to also then create a column just for what statement they're going to impact later, so you can easily find the accounts you need to create your financial documents later. So as it shows, all of the assets and equity accounts are going to be used to create the balance sheet financial statement later. So there are numerous bookkeeping tasks that you could end up completing. These are the most regular ones. And of course, it's issuing invoices and receiving invoices and paying and receiving payments. And then tracking your employees and paying your employees. Those are your everyday, every week transactions. However, the more regular tasks you're going to have to do are recording the financial transactions in a general journal and reconciling the transactions to make sure they line up with your bank statements, balancing your books, and generating your financial reports so that you get a clear view of your actual business, your business's current status. So like I said earlier, consistency really is the most important thing here. You want to be consistent when you're entering your transactions and being very careful to make sure that you are accurately marking your credits and debits for your accounts. This is really important for later when you're balancing your books, because if you have to go back to readjust those accounts, it might end up becoming a mistake and later. Many bookkeeping software actually will import the information from your bank, so you just need to verify that your transactions are actually all there. So that is something that will be less worrisome for you if you end up deciding to go with the software. So the general journal is a document, spreadsheet, or even in the accounting software where all of your records, where you record all of your journal entries. And the journal entries are just an explanation of all of your transactions. If you decide you want to do all of this on your own and you decide you want to do a spreadsheet or a physical book, those are fantastic low-cost options, but it ends up becoming complicated. And if you use a spreadsheet, sometimes if you add too many documents or business accounts, it can end up weighing down the Excel spreadsheet and it won't work as well for you. So this is a good example of a general journal account. So it lists all of the transactions as well as the reason for the transaction. There is a reference to the general ledger, which is the next document that you would use in this category. And the general ledger breaks the general journal entries up into the actual account types. So there's the journal entries are taken and posted to the business account sheets in the journal ledger. So essentially, if you had a transaction with the cash and service revenue, you would be marking those transactions on specifically the business account for cash and the business account for service revenue to make sure that at the end of this, all the balances are totaled and accurate. So this is an example of a general ledger for the electricity expense. They record 3 transactions over the course of a year with the journal entry, debit, credit, and a running balance for those accounts. For reconciling your transactions at the end of your month, it's just been the process of cross-referencing your books with your bank statements. It's just so you can make sure that all of your transactions are properly recorded and all of your balances match. And when they don't match, it's likely because the transactions haven't cleared your bank. So some deposits, bank fees, or electronic payments can take up to 72 hours to go through. And it's just those differences that don't even out. So a good rule of thumb is to verify your transactions weekly so that it doesn't pile up on you if something goes wrong. And it's really just dependent on you and your preferences. If you prefer to do it weekly, go ahead. If you think that you don't have enough transactions and you'd rather just do it monthly, whatever is best for you. But the process is just to make sure that your books are balanced and that all of your transactions are accounted for. So at the end of every quarter, of course, there is the balancing of the books, and that is everyone's least favorite job. It's just tallying the journal entries and making sure that everything's even. And it's a long process and it can feel like a lot to do, but essentially all you really want to do in the long run is make sure that all of your debits and your credits are even. That's all you really need to worry about. If your totals all match at the end, it's less then you're fine. So when you do your general ledger and you have all your running balances, all you're doing is going to be tallying them all up to make sure that you're even. And if your books are balanced, then you should be completely set to go ahead and do your financial statements. So for bookkeeping reports, there are 3 main reports that you will end up utilizing regularly. The balance sheet is going to be a summary of your assets and liabilities, what you own and what you owe. And it gives you a clear view of your business's health. The profits and loss statement is also known as the income statement, and it gives you a clear view of what your expenses and your revenues are for the time frame. And like the business budget, this really does give you a clear view of where your income is coming from and if you need to watch where your expenses are going. The statement of cash flows, like the profit and loss statement, it does show how you're spending and earning money, but it does ignore the non-cash items that the profit and loss statement include. So it does show more the business sustainability and your ability to pay off your current liabilities. So the balance sheet includes 3 account types, the assets, liabilities, and the equity. And at the end of the day, you just want your assets to equal your liabilities and your equity. And that's where the balancing of the books comes in. If the books balance, then your balance sheet will balance and you will be completely set. For the profit and loss statement, you're going to be listing your sales, your revenues, and your gains against your expenses and your losses to see what your total actual income is after operating expenses. For the statement of cash flows, it's more about your operating activities and your expenses, what you can get from investing, so selling equipment, what you get from issuing debt or paying dividends if you're a bigger business that has those. So it's more operating, investing, and finance expenses and gains that are going to be accounted in this. And that's where it shows the gain of cash and cash throughout the year. Bookkeeping really is a cycle of things. Once you're set up and ready to go, it's just gonna be a constant cycle, whether you decide to do it weekly, monthly, whatever is best for you and your business. It's going to be a cycle of identifying and recording your transactions, posting them to the general ledger, reconciling them, balancing them, and then preparing your financial statements so that you have a clear view of your business's outcome. As long as you can keep yourself organized and consistently upkeep your documentation, bookkeeping can be very simple and just become a part of your habit for your weekly or bi-weekly tasks that you have to complete. If you feel like this is a little bit too much, then please go ahead and go get assistance, go through a bookkeeper. They are more than happy to help you get everything sorted and get everything organized. Whatever you need for your business, of course, is the best thing for you. And I would much rather you feel comfortable going through a bookkeeper than to struggle on your own and not feel comfortable getting everything properly done. I know that there's a lot to this, and I know that this is more of just a basic overview, and there's still a lot that I kind of left out because I didn't want this to be very, very heavy detail information oriented where it kind of gets overdone and lost. So of course I am set this up so that I have plenty of time to answer questions for you guys or whatever you want to know more information about. I am more than happy to continue. I do have plenty of time, so if any of you would like to start asking questions, I am more than happy to start answering them. So I am actually planning on doing a QuickBooks tutorial in the next month or so. So I am more than happy to help you with that. QuickBooks is very, very nicely automated. I do love that system. It will automatically set up a chart of accounts, the general ledger, and a general journal for you and help you transfer over your transactions. So it's a little bit less, it's a lot less work for you, but you do have to verify a lot of things to make sure that the system is accurate. So I should be doing a QuickBooks tutorial by the end of February, and I do plan to have that one be a little bit longer and a more in-depth tutorial because there is a lot for you to do and set up within QuickBooks in order to feel comfortable. They do have options for your payroll and keeping track of your employees and making sure that they're paid and the taxes are taken care of. So there is a lot more in-depth information I can provide you for QuickBooks. There are, of course, a lot of online references you can use. QuickBooks does really try and help you walk through it. So it's not a difficult program to really use. They do want to make it very easy for you to get through it on your own and make the transactions and make the payments that you need to make. So it should, especially if you set up your accounts, especially with the chart of accounts. Yep, even with PayPal, it should definitely set up so it'll do the double entry method for you. It just, the way it does it is just to make sure that the cash is decreased if you're paying an expense or your cash is increased when you receive money. It's just a fail safe in case one of them is inaccurately recorded, that you can easily verify it and correct the mistake. That's the benefit of the double entry system. It's mostly so that you have an opportunity to catch your mistakes a lot easier because it is being recorded twice. No, if you are setting up your LLC and you are buying items for your business, as long as you keep the receipts and the documentation so that you can properly categorize them later as business expenses for your taxes, especially since you are building your own small business. You want to make sure you get all the small business deductions you can. So just keeping the receipts and making sure that there's documentation that was for your small business is the best thing you can do, even if you haven't set up the other bank account. It could be owner investment. Owner investment is a good account for that to be put in. It's just an account that's a personal investment from the owner to build up the savings of the business. So that would be a perfect account for personal cash paid for expenses. And it would allow you to help pay yourself back as an owner investment. That way, when you get to that point and you want to pay yourself back for those expenses, it's easier to do it with the owner investment account. So it doesn't look like you're taking cash straight out of your business. If you wanted to rename owner's equity as personal cash, you can. QuickBooks does let you rename your accounts or choose from a long list of them. There's many options, so you could do personal cash and just rename the owner's investment. As long as it's counted as an equity account, you will be all set since it is a owner's investment. Yes, so when you do those types of transactions, like John said, where you paid personal cash for those expenses, when you put them in, you can account them as an owner's investment and pay yourself back through the same account, because that way it's recorded as a business transaction and not just the owner withdrawing cash. So it's accounted better for tax purposes, especially since you would like to make sure that those get deducted for the business. As long as they end up being allocated to the business's assets and everything else, you should be able to pay yourself back from the owner's investment as a return for those expenses. But again, keeping records of those, since I know you're still setting up your LLC, would be the best choice. So just setting aside a folder of all your receipts or scanning them all into a iCloud, just labeled expenses to be returned, would be easiest. That way you know exactly where those are going. I'm glad this was a help. I was a little bit worried that I was speeding through everything. I should be able to get the QuickBooks done in February. There will be an announcement about it on the SCORE website. That is what I'll be working on immediately after this. And I should be allotting a longer time frame for that because I do really want to work through getting everything set up through the accounts and the payroll and everything so that you have a step-by-step process. Best place to identify expenses. So you mean identifying the expenses accounts and making sure that it's allocated to the correct accounts? Labeling them. That's something I'm gonna have to look more into because QuickBooks has definitely changed in the last several months from me not being able to use it. You should be able to, when expenses are entered, allocate them to your chart of accounts. So that should label them automatically for you. And then it gets separated into your general journal based on those expenses. Oh, so for office expense versus educational. So what is the actual expense you are trying to label? And for Angeli, yes, if you do a lump sum transfer into the bank account, that would be an owner investment or an owner equity. They're essentially the same thing. Equity is just your stake in the business. So owner investment or owner equity, they are interchangeable for that term. I would put QuickBooks as a office expense because it is an administrative expense. But that's my personal preference because I believe for me anyways, office expenses are any administrative expenses like paper and all of those extra supplies that I would need to operate my office. So you would need that to operate your bookkeeping in your office. So I would qualify that as an office expense. No, QuickBooks has a fantastic system for inventory, and it will help you automatically keep track of what you have and when you need to reorder. So for QuickBooks, if you enter your inventory items and enter a starting count, it will keep track of that when you sell them based on the invoices you sell out. And when you order more in, it will automatically add those to those inventory item counts. So it does help keep a perpetual system of inventory for you. So it's less of you struggling to keep track of what you need to order. It'll let you know when you're getting low on specific inventory items. You are very welcome. I know that labeling expenses can be a little bit difficult. I just think that when you get down to it, a lot of expenses for like just your home business can be qualified as an office expense. When it comes to QuickBooks, honestly, that system is absolutely fantastic, and it really does help you go through any part of bookkeeping that you could possibly need to go through. And so I do plan on going through as much of that as I possibly can. And I look forward to talking to you all then. Do we have any other questions? And I will make note of all the questions you guys are giving me about QuickBooks, just so I can make sure I touch on them when I do that presentation. Good resources to find a bookkeeper. It really does depend on what you want or need, because there are, of course, bookkeepers that you could find online that work remotely that could assist you. Or if you want to find one locally in your area. If you do want to find one locally in your area, of course, doing a quick search would be easy. A lot of them are rated and they are required to have those ratings just to give references. And it's easy to kind of sort through the ones that you feel might work best with you through those. I think it's limited to a calendar year, honestly, for business expenses. Usually they fall under the small business deduction, the QIBD, and that is very strict about the timeline. So I would say probably within that calendar year is your limit. As long as you have good records of it, you should be able to still get somewhat of a deduction or be able to get a credit for that. We do still have a couple more minutes if there are any other questions. All right, I do believe that is all the time we had set for today. I look forward to talking to you all again when I do the QuickBooks presentation.